Namaste everyone. So we discussed how to draw trend lines yesterday, and before going ahead I would like to show this one chart to you. This is a zinc minis future over here. So we'll be drawing trend lines in this, right? So we are seeing a swing high, swing high, swing high, and swing low, swing low, swing low, right? So we'll be connecting it. I hope you can see there's a wick over here, right over here where I have clicked, and we'll be connecting this wick again. So that's our trend line, right? And another trend line that would come will be over here, right? So if I connect it from here to here, and I'll extend it. So I mean, this drawn is seems like a perfect trend line, right? But the one drawn on the lower side does not seem a perfect trend line, because what I said yesterday was I connect wicks to wicks, but with experience you change few things. For example, I'll connect it over here and I'll connect it over here. I'll be still getting three touches. Okay, it's this is the first touch, this is the second touch, this is the third touch, and over here trend line breaks, and like it's a breakdown of trend line over here. Actually, this seems like a reversal, but we'll discuss it. Discuss why this reversal didn't work in another video. Okay. So now I hope you know how to draw the trend lines, and now I would like to tell you the pros and cons of using trend lines for intraday trading. So the pros would be: number one, the first thing it does is that it eliminates your issue of over trading, because you would be trading only on breakouts of trend line. Okay, so I mean, like, you can avoid the issue of over trading with that. Plus it helps you get on the trend at or before the pinpoint of beginning of a trending move, and the SLs, I mean, like, the stop loss are considerably smaller. And if you are an aggressive trader, it can give you three trades in a single trendline break itself. And moving on to the con side, the cons would be, like, I can only think of one at the moment, that is sometimes and on some days you would not get any trades at all. Even if the market is moving well, you won't be able to enter it, because you are sticking by the rule of entering only on the trendline breakouts. Now, the issue that we would be facing would be, like, there will be too many trend lines in a day if we start connecting the wicks of every single high and every single low, right? So just like I showed you this chart over here, so we connected swing high, swing low. There are two trend lines at the moment. Like, I can also put this trend line over here. I mean, it's an hourly chart, but like, we'll take this for reference as of now, right? And you can connect over this as well, you know. So it looks like a complete mess. uh, so so this is where the understanding of the market movement comes into the play, and actually helps us to narrow down on one particular trend line that we should be interested in, and a trade happens only if it breaks. So for this chart, my trend my the trend line of my interest would be this one, actually, the one that draws this one. So I'll delete every other one. Okay. This is my trend line of interest. It has broken. I would have taken an entry over here, and the stop loss would have been somewhere over here. Okay, so regarding the market's movement, it particularly moves. There's one impulsive move, a retracement, another impulsive move, retracement, and like this is how it moves in a downtrend, and in an uptrend it will be moving like this. So impulsive move on the upside, a retracement, a impulsive move on the upside, retracement, and an impulsive move on the upside. So from a particular experience, I have seen that there's an impulsive move. The retracement actually goes something like this, and it will be leaving behind a trend line like structure where you can actually draw the trend line and then again continue with its next impulsive move, and then again it will be retracing and again an impulsive move. So this is how we would be uh, taking the help of trend line to enter into an impulsive move on the continuation side and not actually on the reversal. So how we will be using the trend lines actually, we won't be finding the trend reversals, we will be actually using it to enter the continuation of the trend. So what I mean is that if a structure making trend line is formed after a fall, I would be interested in finding a point using the trend line to just enter into the same trend that is more on the downside. And similarly, if it was formed after a rally, I would be looking to enter the rally. But we can also trade reversals, but we'll be talking about reversal trades in some other video. So the point to remember over here is to not fight the trend. Fighting the trend is where the trend line fails us if you enter exactly on the breakout. Like it will be showing you a false breakout and then it will break on the other side. And the thing chart that I just shown you few minutes ago is the best example. So what basically happened over here is it made a swing high, then a swing low, then again a swing high, but it's not a higher high. Again a swing low, again a swing high. That actually seems like a trend line is broken over here. But if you see the high made over here, right? Okay. If you see the high made over here, it's not taking out the previous high. It has not made a new higher high. So like if you would have entered over here with an expectation that it would go up like this, you might have actually ended up in loss, and hence this was not a trade at all. So like if you enter over here, right, on like if we are entering on the same side, like if you see on the left side it was falling. After that it gave me a structure where I could draw the trend line, and again when it breaks down I'll be entering again over here. So basically how we will be approaching a chart using this method is we'll just see a little bit on the left side to see what happened before we were able to draw a trend line, and we will wait for it to break as well. So let me demonstrate a few examples on this chart over here. So I'm not seeing anything before the day. I'm seeing this structure, like it from the day started it fell till here and then it's retraced. So I'll put a trend line over here. This would have been my first trade. There's another trend line over here, there's another trend line over here, there's another trend line over here. And with my personal experience, if you are entering as soon as you see a break on the same side of if you are entering on the break in the continuation, uh, there are rare chances that it would be failing. I mean, it fails, but there are rare chances of it failing. So I hope with this video it would be clear for you to understand regarding how to narrow down on a potential trade worthy trend line. So if you have any doubts, feel free to comment down below or ask me in the trade learners group that has the link below in the description. So that's it for today, and in the next video I'll be talking about taking the reversal trades using the trend line. Thank you.